Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end 2025 with 10% gains, underperforming Asian and global peers. PSU banks, metal and automobile are the top performers. IT, real estate and media stocks are the big laggards. Rupee ends the year just below the 90 mark against the dollar. The Indian currency depreciates 5% in 2025, making it the worst performer in Asia. A new lease of life for Vodafone Idea. Government freezes AGR dues worth more than 87,000 crore rupees for the next 5 years. Reschedules payments over a 10-year period starting FY32. A government panel will also reassess the dues and the decision will be binding on both parties. Telecom operators lock horns with Adani for not allowing them to set up network infrastructure at the newly opened Navi Mumbai airport. Telcos seek government intervention alleging denial of permission. Adani hits back accusing telcos of acting like a cartel on pricing. Shares of steelmakers rally after government imposes a safeguard duty for 3 years, says a sudden surge in imports has affected domestic prices. Reserve Bank says that Indian commercial banks exhibited sound financial health in 2025 on the back of strong capital and liquidity buffers. Adds that stress test results affirm banks' resilience to withstand losses under adverse scenarios. The RBI report also highlights that strong capital buffers improving asset quality keep NBFCs robust. Bharat Forge will close FY26 with an order book of around 14,000 crore rupees as Baba Kalyani secures a second major government contract to supply guns designed and developed in India. That's an exclusive. Zomato, Swiggy and Zepto announced new incentives for deliveries on peak hours today. This after gig workers announced a strike on New Year's Eve, citing unsafe working conditions, declining wages, lack of social security, among others. Ocean of mourners flood the streets of Dhaka on Khaleda Zia's final journey. Bangladesh's first female prime minister and one of the nation's most influential leaders is laid to rest beside the grave of her husband, former President Zia Rahman. India's external affairs minister attends the funeral. After spending 60 years at the helm, legendary investor Warren Buffett retires as the CEO of Berkshire Hathaway today. Longtime Lieutenant Greg Abel will take the reins of the company with a record cash reserve of $380 billion. All right, let's start with the day's market action. The Wall Street snapped a 4-day ending streak, ending the year higher amid broad-based gains. Nifty rose nearly 1% and crossed the 26,100 mark for the year. Nifty and Sensex gained 10% each. However, underperformed its Asian peers and key global indices. PSU bank, metal and autos were the best performing indices, rising between 23 to 30%. Meanwhile, media, realty and IT fell the most amongst indices, slipping between 12 to 20%. 31 Nifty stocks gave positive returns with gains ranging from 1% to 72%. From equities to currencies, the rupee ended the year just shy of the 90 mark against the dollar. The Indian currency has depreciated 5% this year and is the worst performer in Asia. This is also the rupee's steepest annual fall in 3 years. From currencies to the commodities market, crude oil prices are on track to register its steepest annual fall since 2020. Prices have fallen more than 15% over the course of 2025. Fears that supply will outpace demand, higher tariffs, OPEC plus output hikes and sanctions on Russia, Iran and Venezuela all weighed on prices through the year. Silver prices remained volatile too, falling nearly 8% after gaining 10% in the last trading session. This as aggressive profit booking and thin year-end liquidity triggered heavy selling across commodity markets. Despite this, the white metals price is 139% higher than it was at the start of the year. Similarly, gold prices also softened just before the new year. However, the yellow metal has been on a bull run in 2025 with prices rising by 65% this year. All right, the top story we're tracking this evening, a new lease of life for Vodafone Idea. The Union Cabinet has frozen AGR dues worth more than 87,000 crore rupees for the next 5 years. The payments have been rescheduled to a 10-year period starting FY32. A government panel will also reassess the dues and the decision will be binding on both parties. Shares of the company declined 10% to drop below the 11 rupee mark, which was the price set for a follow-on public offer in April last year. Ashmit Kumar is here with the details. Ashmit.
Well, there are 4 key takeaways that we need to bear in mind as a part of this relief package that has been cleared by the cabinet. Number one, we understand is that there will be a freeze as far as the AGR dues is concerned. That freeze is as of 31st of December 2025. The amount in question is 87,695 crore rupees. That's the first leg. The second is that for the next 5 fiscal years, beginning FY27, stretching all the way till FY31, there will be a moratorium on payout of dues. So essentially, protecting Vodafone Idea to the extent that no AGR payments will be required to be made. That's the second leg. The third is that there will be a 10-year payment schedule that has been proposed that will begin from FY32, stretch all the way across to FY41. Now, that's the third leg. The fourth is perhaps, however, the most critical aspect of it, and this has been a long-standing demand of Vodafone Idea. Vodafone Idea has been talking about how this AGR amount that was finalized was erroneous. There was double counting of various entries, that there were arithmetic errors in computation of this finalized amount, and therefore Vodafone Idea for long had been seeking a reassessment, a recalculation of all these dues. That is a demand that has been agreed to by the cabinet. The cabinet saying that yes, going forward there will be a government appointed committee that will be reassessing these AGR dues in question and then will arrive at a final amount that will be payable by Vodafone Idea. So clearly, important relief package being announced, being proposed, being cleared by the cabinet. But having said that, there is also just a final caveat to bear in mind that there are smaller dues for FY18 and FY19. That is something for which the cabinet is clear that payment is likely to continue. But for all other dues, moratorium for the next 5 years, then a 10-year payment schedule, and of course the finalized dues will have to be cleared by a new government-appointed committee. Back to you.
Right. Thank you, Ashmit, for that. Let's shift our focus to another big story that we are tracking. Incumbent telecom companies have locked horns with Adani-run Navi Mumbai airport for not allowing them to set up network infrastructure. Industry body COAI has sought the union government's intervention over alleged denial of permission and the airport authority imposing their exclusive in-building telecom arrangement on them. Adani Airports has hit back as well, saying they won't give in to cartelization of this entire process. Madiha Mujawar joins us now. Madiha, take us through the entire tussle.
Well, passengers who have travelled from and to Navi Mumbai airport have been complaining about network issues. Even I was there and even I faced network issues when I was reporting on day one of the commercial operations. We are unable to make calls or access internet inside the airport. That's because lack of telecom towers inside the airport premises. And at the heart of the dispute is who controls the telecom infrastructure inside the new airport and at what cost. Now, India's 3 private telecom operators, Airtel, Jio and Vodafone Idea, have written to the Department of Telecommunications accusing Navi Mumbai International Airport of denying them right-of-way permissions. Now, under India's right-of-way framework, airport operators are statutorily obligated to allow licensed telecom companies to deploy their own network infrastructure like optical fiber, erect towers, or deploy other telecom infrastructure. But NMIL has installed its own in-building solutions and directed the telecom operators to utilize that network allegedly at exorbitant and commercially untenable charges. Now, operators say that NMIL is seeking approximately 92 lakh rupees per month per operator, aggregating to over 44 crore rupees per annum for 4 operators, including BSNL, to use the network installed by it. Now, here's the airport operator's version when we reached out to them. It said that it had made a conscious decision to install the in-building solution, or IBS as it is called, as a neutral host telecom network because at many airports, the airport NMIL argues that critical zones like baggage belts, ATC buildings and utility areas get neglected by the telecom service providers, affecting airport efficiency as well as passengers. Now, it also points out that airports are highly sensitive security zones requiring frequent maintenance, which is best handled directly by the airport operator. Now, with security clearances for entry already available, NMIL says that it is best suited to take care of this infrastructure. The NMIL is also saying that it never denied right of way to any telecom service provider. The airport says that IBS charges are in line with industry standards and that the telecom operators are yet to formally revert to the airport operator. And importantly, NMIL says that government-owned BSNL is already in advanced testing stages on the IBS network installed by NMIL. So that's the dispute, and the telecom operators are urging the government to direct NMIL to give them right of way, look into what they call a monopolistic setup, and stop blaming telcos for poor network coverage at the airport.
All right, thank you, Madhiya, for that comprehensive update. Moving on, steel stocks ended the day higher after the government announced a safeguard duty on steel imports. Now, the government has imposed a 3-year import duty between 11 to 12% on certain steel products from the 21st of April. The temporary 200-day duty expired last month. The government has said that this duty is required since there has been a sudden and significant increase in steel imports. This increase is causing serious damage to the domestic industry. The government launched the market access support intervention under the export promotion mission. It will involve allocation of 4,500 crore rupees in 6 years for market access support. This includes a 500 crore rupee outlay for FY26. Abhimanyu Sharma has more. Abhimanyu.
The rollout of the export promotion mission has already begun, with the government already issuing the first guideline under a component of the export promotion mission, that is the market access initiative, in which the market access support of rupees 4,531 crores would be provided over a period of 6 years. The government aims to issue the remaining guidelines for the remaining components by the 31st of January to speed up the overall rollout of the export promotion mission, not just to help exporters tide over the current problems, but also to help them explore new markets for several products which the exporters are intending to export but are finding several difficulties as far as reaching out to foreign buyers and also resolving several other concerns is concerned. The government has also indicated that the export promotion mission per se is not in response to the US tariffs, since the US tariffs are an entirely different issue at hand. The Commerce Ministry has also indicated that tariff of over 50% cannot be countered, and the sub-schemes under the export promotion mission for interest subvention and collateral are also ready. They are going to be notified shortly as part of a continuing initiative and endeavor by the government to resolve problems being faced by exporters, particularly for labor-intensive products owing to the US tariffs and also due to a slowdown in several Western economies.
Right, thank you, Abhimanyu, for that. Defence stocks traded positively in trade after the government signed contracts worth over 4,600 crore rupees. Bharat Forge has emerged as the largest small arms contractor for indigenously designed and developed close quarters battle carbines. Speaking with CNBC-TV18 exclusively, the company's CMD, Baba Kalyani, said that Bharat Forge will also explore international markets for carbines and is in talks with 2 to 3 large companies who want to shift production out of Europe into India.
And, we have 60% of this contract because the L1 gets 60%, we were L1, so 60% of that quantity will come to us. We are quite ready, and we are very hopeful that once we productionize this, which will happen in the next 4 or 5 months, we will also create capability to start looking at international markets for these products.
Right, let's shift our focus to a story that impacts a lot of people. Quick commerce delivery platforms have announced new incentives for deliveries during peak hours today. This has come after gig workers announced a strike on New Year's Eve, citing unsafe working conditions, declining wages, lack of social security, among others. Shilpa Ranipeta, who's been tracking this very closely, is here with more details. Shilpa.
Well, with the gig workers threatening a nationwide strike today on the 31st of December, food delivery platforms have now quietly started pushing back with higher peak hour payouts. Now, Swiggy, Zomato and other platforms also have been messaging delivery partners and updating it on their apps over the past 2 days, offering additional incentives through the evening and late night slots. And this is when, remember, order volumes are typically at their highest. Now, some of these messages seen by CNBC-TV18 show delivery partners being offered an extra 30 rupees per order for deliveries between 4 to 6 p.m. today, about 100 to 105 for deliveries between 10 p.m. Between 6 p.m. to 10 p.m. and 80 rupees between 10 p.m. till midnight. Zomato, in fact, is also offering an additional 80 rupees between midnight to 4 a.m. deliveries as well. And it's not just food delivery platforms. Instamart, Blinkit, Zepto are also offering higher peak hour payouts and guaranteed earnings, which would be based on the number of orders that these delivery partners deliver. While Eternal has not commented on the strike or the payouts, Swiggy told CNBC-TV18 in a statement that these enhanced incentives are part of its standard process and are offered to allow delivery partners to earn more during peak demand periods across the year. Now, remember, nearly 1.7 lakh gig workers, led by the Indian Federation of App-Based Transport Workers, have threatened to go on strike today and during New Year's Eve. Now, they are protesting unsafe delivery targets, falling wages, arbitrary ID blocking, police harassment and the denial of dignity and social security. And through the protest, they are demanding regulation under labour laws, fair and predictable wages, mandatory rest breaks and the right to organise. And all of this even as they wait the implementation of the Social Security Bill. Now, brokerage Elara Securities, in a note earlier this year, estimated that a widespread strike could hit order volumes by up to 10 to 20% for these players, and that could translate into a 0.3 to 0.7% revenue impact in the third quarter. Remember, festival days typically see up to 60% higher orders. But Elara also flags that there could be limits to this disruption because New Year's Eve is among the highest earning days for these gig workers, and this sector is still highly unorganized, and so login decisions are often driven by individual incentives, and it's a decision that one person takes on his own, and that's in fact something that platforms are now leaning on. A strike that also happened on the 25th December saw just about 40,000 workers participated, and there was just limited impact in pockets of Gurugram and some southern markets. Remember, 40,000, but India has nearly 1.7 crore delivery workers. Now, we'll have to see during the peak hours later in the night today to get a sense of how many gig workers are actually participating in the strike and the ground level impact of the strike on these platforms and us consumers ordering from them. Back to you.
All right, thank you, Shilpa, for the heads up. On that note, we'll slip into a short break. Coming up next, after spending 60 years at the helm, legendary investor Warren Buffett retires as the CEO of Berkshire Hathaway today. Details when we return. Welcome back. It's the end of an era in Bangladesh's political history. The nation bid farewell to Khaleda Zia, its first female prime minister, a lady who never lost a parliamentary seat that she contested. An ocean of mourners flooded the streets of Dhaka to pay their final respects, bringing the city to a standstill. One of the two vanguards who dominated Bangladesh politics for close to 4 decades. Khaleda Zia died yesterday at the age of 80 after battling multiple health complications. India's External Affairs Minister S. Jaishankar attended the funeral and met Tariq Rahman, her son, and the acting chairman of the Bangladesh Nationalist Party, the BNP, government representatives from Pakistan, Bhutan, Nepal, and diplomats from over 30 nations were in attendance as well. All right, shifting focus to the continuous series that we are talking about and flagging the inconsistencies is about the CAG report. The government's top auditor has flagged serious discrepancies in the financial assistance extended to building and construction workers in Maharashtra during the COVID-19 pandemic. The CAG audit report also found wide-ranging lapses in welfare delivery, inspections, contract management and cess collection. Santya Gora has more. Santya.
So India's top auditor has revealed major lapses in the implementation of the Building and Other Construction Workers Welfare Act in Maharashtra. A CAG report flags serious financial irregularities in schemes meant for construction workers during the COVID period. Between April 2020 and March 2022, a financial assistance scheme was launched for construction workers, and the audit reveals that in over 44,000 cases, installments under the scheme were disbursed more than once to the same bank account. In several cases, payments were transferred 5 to 6 times to a single account, leading to an excess payment of over 5 crore rupees. The audit further reveals that 60% of beneficiary claims were approved after a delay of more than 1 year, but rejection process took only 7 days. HLL Lifecare Limited, a Government of India enterprise, was selected to conduct health checkups for construction workers in the state. However, only 15% of registered workers were able to avail the benefit. The report also flags a lack of transparency in awarding contracts. Contracts for safety kits and essential kits were awarded to Indo-Allied Protein Food Private Limited and Gunina Commercials Private Limited, firms that had no prior experience in safety or essential kits and had previously dealt only with school bags, shoes and notebooks. Till March 2022, 802 essential kits worth over 36 lakh rupees were distributed twice to 401 beneficiaries. In addition, over 24,000 safety kits worth 11.38 crore rupees were distributed twice to 12,215 beneficiaries. The report also reveals that planning authorities such as BMC and MMRDA excluded non-FSI areas while applying annual statements of rate, leading to a short recovery of over 29 crore rupees in cess collection. A consortium of ITI Limited and Arcus Infotech Private Limited was awarded a contract worth 88.60 crore rupees for developing worker registration and claim management modules. However, despite failing to develop the accounting and finance module, no action was taken against the consortium by the state government. Irregularities in contractual hiring, non-registration of construction sites and workers, and non-maintenance of a midday meal database are among the other serious lapses flagged in the report concerning the welfare of building and other construction workers.
All right, thank you, Sandhya, for this update. Moving on, after spending 60 years at the helm, legendary investor Warren Buffett will retire as the CEO of Berkshire Hathaway today. Long-time Lieutenant Greg Abel will take the reins of the company with a record cash reserve of $380 billion. Hormaz Patakia is here with more on the highlights of Buffett's 60-year-long career.
Today being the last day of the year, of course, but it holds special significance for Warren Buffett as well and for Berkshire Hathaway. Today being his last day as the CEO to end a career that has spanned over 6 decades. And almost everybody now knows as to why Warren Buffett bet on Berkshire Hathaway, because it was trading below its working capital value at that time. But today, that investment has created a conglomerate that spans across insurance, infrastructure, railways, energy, consumer and industrial brands, and of course the much talked about investment portfolio. The price is what he paid, the value is what stands today 6 decades later. Today, to buy one Class A share of Berkshire Hathaway, you need to shell out $750,000. Yes, that's Buffett and his principle of a long-term compounding for you. A $1,000 investment 60 years ago would today be worth $45 million. That someone is definitely sitting in the shade today because someone planted a tree a long time ago. Now, Buffett leaves Berkshire Hathaway with a massive cash pile, literally massive, because it is $382 billion. That's more than the GDP of 152 countries on this planet. And just as all good things come to an end, Buffett's stint has ended. But the next question is, who is next? Who takes over? Meet Greg Abel, the 63-year-old Canadian who takes over the reins of this widespread conglomerate starting tomorrow. And Abel's presence is already being felt in Berkshire circles, because as recently as November this year, Berkshire disclosed a $4.5 billion stake in Google's parent Alphabet, sending Wall Street into speculation mode, as this could not have been Buffett's decision alone, considering his prior anti-tech stance. Now, he always has called Apple still his biggest bet, a consumer services company. But there is still a lot that Abel still has to conquer. First up, to win the trust of his investors and the shareholders. Although the board has wholly backed him, the shareholder trust would be paramount. Next up, hunt for bets to deploy Berkshire's cash pile. That Alphabet stake buy might just be the start of that as well. Now, a major reason why Buffett picked Abel was his trust that he will continue the culture at Berkshire, and unlike Buffett's showman like era or his aura, Abel prefers to stay away from the limelight and let his work talk. Now, he was also once hailed for this attitude by the late Charlie Munger. With Buffett at the helm of Berkshire, there was a sense of continuity, the thought that he'll be around forever, but that's not the case. Will Berkshire still be Buffett's Berkshire, or will Abel be able to turn in a new chapter in this story? Well, he stepped into the shoes that once looked impossible to fill. While they may not be impossible, they're certainly large ones, $1 trillion and more at large for sure.
Thank you, Hormaz, for that. With that, it's a wrap on this edition of Business 360. News and updates continue right here. Thank you for watching.